A spike in gas prices this week as drivers see the biggest one-day jump at the pump since 2005. I'm Clinton Griffiths. It comes as the military action with Iran steps up and a senior official with Iran's Revolutionary Guard saying the Strait of Hormuz is closed. And if anyone tries to pass, Iran will, quote, set those ships ablaze, end quote. Now, AAA reporting right now the average nationwide price for a gallon of gas is $3.10. That's up 11 cents from Monday. And look at diesel, now at $3.89 a gallon. That's up 12 cents a gallon from Monday. It's reported that Secretary of State Marco Rubio has said the U.S. will take action to mitigate rising energy prices due to the strikes. I'm joined by AgDay's Michelle Rook. And Michelle, you're watching this situation very closely and the impact it could have at the farm level.
Well, Clinton, diesel fuel prices were up a combined 60 cents on Monday and Tuesday in response to the Iran war and the supply cutoff through the Strait of Hormuz. And energy experts tell me there is more risk to the upside depending on how long the conflict lasts. This comes at the worst time for farmers who will see increased demand for diesel at spring planting time. The Iran war has spiked diesel prices, with refined product movement halted out of the Strait of Hormuz. Energy experts say it's one of the biggest global disruptions for the oil market.
So a large amount of refined products, specifically diesel and jet fuel, transport through this strait, and that closure is causing panic in buyers of Middle Eastern diesel, one of which is Europe, which is kind of the primary maker of diesel prices globally, and that's dragging on NYMEX heating oil diesel prices as well.
EIA data shows diesel pump prices were around $3.88 a gallon on Tuesday, up 26 cents from a year ago. However, NYMEX heating oil futures, which diesel prices are based on, were up nearly 60 cents from Friday at $3.26 per gallon. Compared to a year ago, NYMEX heating oil prices are already up over 90 cents. Alex, do you think prices are going to continue to go up?
Yes, I think there's still risks that are in the market and have not really come to fruition quite yet. So ultimately, the Strait of Hormuz closure, the question will be, how long will that last?
Some relief should come from President Trump ordering the U.S. Development Finance Corporation to provide at a reasonable price political risk insurance and guarantees for the financial security of all maritime trade, adding if necessary the U.S. Navy would escort tankers through the strait. Yet that doesn't solve every problem.
One other factor is that several Middle Eastern refineries have been attacked, and that's over 1 million barrels per day almost offline due to those attacks. So additional Middle Eastern refineries could be at risk, and that's another bullish factor there.
And Hoda says proportionately, diesel has gone up more than other energy products, partly due to the tight global inventories.
But the biggest one is that there's more diesel products flowing through the Strait of Hormuz than gasoline or some of the lighter counterparts.
So this comes at one of the worst times for farmers, with higher diesel demand at planting time.
It is a tough time to lock in fuel costs, specifically, in the start of March now. So it's not a great time to be a consumer of fuel.
And he says, unfortunately, not enough farmers locked in diesel prices when they hit their lows in December and early January before the big winter storm rallied prices. I'm Michelle Rook reporting for AgDay.